Are you a working professional but struggling to balance the workload of your career, family, obligations, and preparing for your financial future? If so, this podcast is for you. You've spent years learning your craft, and now it's time to focus on your financial future. This podcast will teach you what you need to retire wealthy and happy. Let's dive in.
Welcome to the Retire Wealthy and Happy podcast. We created this podcast to provide financial tips and tricks to help you build up your passive income and also provide methods that you can use to protect your wealth so that you can plan a better future for yourself and your family. We're grateful to have this podcast sponsored by Monument Real Estate Capital. Monument Real Estate Capital, helping you retire 10 years early through real estate investments.
Hello and welcome to the Retire Wealthy and Happy podcast. I'm Roger Jacobson and I have Anthony Esparza with me today. Today we're interviewing Anmol Singh. Anmol is a big-time stock trader in New York and has a huge amount of followers, and we're glad to have him on the show. Welcome to the show, Anmol.
Thanks for having me. Looking forward to chatting with you.
So why don't we just jump in and start with a little bit of your bio and history and tell us how you got to where you are now.
Definitely. So, I started trading in the stock market in my dorm room in college, and I went to college in London. So there before you can graduate, you have to have a year's worth of kind of like work experience or internship or something before they let you graduate. So that was one of the times for me where I started applying for a bunch of different jobs or internships from the top companies all the way down to the lowest startups. And I couldn't find a single job. Not a single person would give me a call back or even an internship or anything like that. And I was willing to work for free. And I still wasn't able to get a call back. And I think that's kind of when it dawned on me, like, okay, I can't just can't just be sitting in my dorm room not doing anything for the whole year. And I can't rely on somebody to give me a job. Like, I have to go out and make it happen. And I came from an entrepreneurial family. So saw my dad growing up early and working, and he was an entrepreneur. So I kind of knew that already. But a part of me kind of like wanted a job just because I saw also instability in my family where we would not know month to month what the business is going to bring in. So I was like, I'd probably would be better if I just get a job. So I know exactly what I'm going to make. But I didn't get one. So that kind of put me on a journey of researching about stocks, reading more about it, taking online courses, and just really immersing myself within that period and learning about the markets to a point that I was, writing a blog on just different analysis that I used to do. And that got picked up by Yahoo Finance and other websites that I used to write for as a college student. And that's why I tell people, don't trust anything you read online, because it's probably written by a college student like me, who was just a freelancer getting paid to write articles. I think that's kind of my beginning of my research in the stock market. And then, found a mentor online, took one of his courses and joined the company that he was at. And then I started trading, it's what's known as a prop firm, where you're trading the company's money, and in exchange, they take a percentage of everything you make. So started, I just kind of worked my way up in the firm. That's how I got my start in the stock market.
That's great. Love the story. In your bio, it says you started multiple franchises in your dorm room. Other than those, is there anything else that you started in your dorm room?
So when I made like money for trading, that was my first ever thing, because obviously before that, I didn't have any money. I started an automotive franchise, don't have it anymore, thank God. I actually got rid of all of those right before COVID. I think it was just the perfect timing. I had automotive franchises. I had real estate, which I still do. I have a lot of Airbnb properties and businesses that I'm into now. But trading is how I got my start. Like, that's how I got the money in the first place, to be able to do all those sorts of things.
That's awesome. And so now are you trading purely with your money, or whose money are you using on your trading?
Yeah, right now I'm trading only with my money. I did it for a long time, trading the company's money, but then I was at a point where I just didn't need the company's money to trade. So I was like, why should I give him 30% for everything I make? I'm going to have my own capital. So I just trade my own money now. There was a past where I was trading other people's capital, managing sort of like a mini fund, but now I just do it for myself, because one thing I did realize was, it looks glorious to have a fund and manage money, but you're also buying yourself a job. You're going to be tied down creating investor reports, answerable to investors. And more so than that, the hedge fund world, it's not really about the art of trading and investing, which I love. It's more about going to networking events, kissing a lot of frogs, raising a lot of money. Like when I used to hang out with these hedge fund guys, that's when I realized that I don't want to be in this business, because it's all about raising money and meeting people. And I'm an introvert. I'd rather just be on my computer and do it by myself.
That's awesome. So you went from almost managing hedge funds and working for other companies. Do you now have your own company, or do you just independently trade by yourself?
Yeah, so we have a company. It's called Live Traders. So I trade my own capital anyway. So it's not like a company account. So I trade my own money. My business partner, he trades his own money. But then together we run Live Traders, where we teach and educate other people who want to get involved with the stock market. We offer advisory services, newsletters, and things of that nature for people who are either new to the stock market or people who are just looking for ideas on, hey, what am I doing in my own account? So we do have those sorts of services, and we do seminars and things around the world.
Nice. And how long have you had your new company for?
We started that in 2015, so that's when we started livetrade.com. But personally, I started trading in 2010, so I'm on my 14th year now.
Okay. And did you also, back in 2015, did you start your YouTube then, or is this newer? You have kind of a big following on YouTube. How did that all come together?
Everything online started in 2015 when we started Live Traders. So we started a YouTube for that. But honestly, YouTube didn't even take off till like 2019. And for 4 years, it was like pretty dead. Like majority of our videos weren't getting a lot of views. And we had, I don't even know, maybe like 11,000 subscribers for like 4 years. And then 2019 is when it finally took off. I think we had one video that just got millions of views, and from there, everything just kind of took off on a different trajectory.
And I don't know about you, Roger. I've tried some day trading before. I've never had success. They say 90% of day traders lose money. Is that true? And what was your process to kind of, I mean, you hear about the stock market and people do a lot of long-term investing. How'd you kind of narrow down into the day trading space, and is it true most people lose their money?
So I think firstly, the stat is definitely misleading because if you look at the research report, that was calculated by brokerage firms, and what they did is basically they just looked at everybody who had a trading account that pressed a buy or sell button at any given point, and they counted them in the statistic as a trader. So technically, my mom is in the statistic as a trader because she bought a stock one time and sold it, right? So that statistic is misleading because it counts everybody who ever pressed the buy or sell button, and we all know just pushing a buy or sell button does not make you a trader. Right. I mean, the people who did all the AMC, the GME, they're not traders, they're speculators and they're gamblers. But if you actually do research on people who've gone through years of studying, they have a process, they have a system that they have back tested, they have the data to show the last 500 trades with that same sample size. That's what I call a trader, because I could say the same thing, let's say about golf. Oh yeah, I tried playing golf. Most golfers they're not very good. But not true, right? If you really, it's like a sport. You get good at it, you're going to be one of the good ones. If you're not going to be good at it, you're going to be like everybody else. So trading is the closest thing to a sport. But I don't just day trade. I believe there's many different ways to trade and make money in the stock market. So day trading is what we call income producing. That's where we're going to day trade every single day. And the goal is to make an income, to make something to live off, to pay your bills. That's day trading. But then we also do swing trading, where we're buying a stock, we're maybe holding it for a few days or a few weeks. Right. And then we also do investing, which is called wealth producing style. So the income producing style, you make an income off it, live off it. That's day trading. Then there's wealth building style. That is kind of like investing, where you're just buying a stock. Maybe you make an income from another business. You take a percentage of that income and you automatically keep investing it. And that's to grow an account, to build wealth. So we teach both income producing and wealth building.
Nice.
We don't give stock or investing advice, but can you give us some examples of what you would do on each of those? Like, where would Tesla fit in there? Would that be one that you are investing in or swing trading in? How does, a typical stock go? Are you doing calls and puts to be day trading, or give us a little background there?
Yeah. So when it comes to day trading, typically I won't be in the trade for more than like a few minutes. It's in and out. And sometimes I use the stock to get in and out. Sometimes I use call options or put options. Like today when I traded put options. on Tesla, Microsoft, and we were just looking for, as they get extended, looking for a little pullback. So day traders, we're not looking for anything fancy. We're not looking for these crazy home runs, or we're just looking for, okay, can the stock pull back $1 right now, right? And then we're looking for these small pockets of voids that we're trying to capitalize on. So for me, Tesla is one that I day traded today, right? I was in and out, made money on it, but then I also hold Tesla for my long-term account, right? That I'm not touching. That I just keep buying, percentage of your business income, take it, put it away. And that I'm not touching, right? That I'm just going to keep putting in, and that's my long-term investment. But then I'll also, in between, I'll take some trades where, let's say, a few months ago, we saw Tesla come down to $100 something. I bought it. It went back to $300. Now I sold it. And then it came back recently to 160. Then I bought it again. And if it goes back to 300, I sell it. That's called swing trading, where we're trading those swings. So those are the three different ways you can trade. And I think any good trader should not be one-dimensional, that they're just a day trader or they're just an investor. If you're going to do this for a living, then you need to trade different styles in different markets.
So going day trading specifically, is it knowing charts? Is it finding patterns? Is it looking at things posted in the news? How do you calculate a day trade before you jump in one?
Yeah, it's purely technicals. Like, I don't care about the news. I don't care what the company does or anything like that, because we're only going to be here for 3 minutes. So the only thing that matters is charts and technicals and patterns. Those are the things that you need to learn for day trading, because that's the only thing we have to base our decisions on. So that's kind of what we look at for day trades. There's certain patterns that we have that have been tested over time. And by testing, I mean, like, we know the edge. Just like a casino knows its edge. Casino knows that no matter how much people play, at the end, they got this 0.5% winning edge. And that's what we try to do, is we test our patterns over the last many, many years to figure out an edge. And I think most people online have a misconception. They think that, oh, you're a good trader, that you must win 90% of your trades. Absolutely wrong. Right? I might win only half of the trades I take. I might take 10, I might lose on 5 of them, and I might win on 5 of them. But then how do I make money? Well, if my winners are twice the size of my losers, statistically, I could lose 60% of my trades. I only need to be right 4 out of 10 times to make money if I ensure the ratio of every winning trade, let's say, is $1,000, right? Every losing trade, let's say, is $500. So then I only need to win 40% of my trades. And a good trader is only winning 50% of the time. But when they win, the winners make up for those losers. And that's how we try to get the statistics in our favor.
Right. So you almost have stop loss. You don't lose enough money to, overall lose more than what you win. And I've done a little bit of some day trade stuff. In my past, I've never been successful day trading, but most recently I did do a course with a buddy of mine, and they talk a lot about stop losses, right? So like you can't lose a certain amount, but when you do win, you win big.
Yeah, I mean, stop losses are absolutely required. Like, all of our losses, that the way we teach is all losses should be the same. It should not be like one trade you lost 10,000 on, next trade you lost 1,000 on, next you lost 600, next you lost 2,500. When your losses are all random, then it's hard for you to calculate a system and to build a profitability ratio, because you're all over the place, right? So our losses they should all be the same. So you pick a number that you say, okay, if I lose this amount, A, I'm going to be psychologically okay with it. It's not going to bother me. And B, it's going to be less than maybe 1% of my overall account size. So once we pick that number, there's no nervousness. There's none of that issues happening, because you already know what you're going to lose and you've already accepted it. And the way you calculate that is very simple. Let's say you buy a stock at $100 and you say, okay, if this thing goes down to 99, I'm getting out. So, well, now we know we're risking $1 per share. So if I only want to lose the maximum of $1,000, guess what I do? I buy 1,000 shares. And if it goes to 99, I get myself out. So I already know what I'm going to lose. And we try to keep all the losses the same. And the winners can vary a little bit. But if you keep the losses the same, that's the biggest step in the right direction to be a successful trader.
Right. Taking all the emotion out of it.
Exactly. Because that's half the battle in trading, emotions.
Oh.
It's a lot like the house flipping model. The only difference is you can never say, if I'm going to lose $1,000 on this house, I want to stop it there. It's like a burning dumpster fire that you're throwing money in, and you just can't put it out in the middle. So that's a cool concept. When when you're doing day trading, is that pure tech stocks or mostly tech, or is it all over whatever's moving and catches your eye? How does that stock picking go?
Yeah, whatever is moving or whatever has a pattern. So all we're looking for as pattern traders is we don't care. A lot of times we don't even know what the company does or what the name is. We just know the ticker symbols, right? Because we're just looking at the chart, and all we're looking for is the pattern to show up. If a pattern shows up on an oil stock, great. If a pattern shows up on a tech stock, great. We're very indifferent to what the company does. It's all about if does it have that pattern, and is that pattern tested over time and seeing how that performed? Do we have an edge? Like, is it a winning pattern? What if I took this pattern last 200 times? How much result did it make? And then those are the things that we use to make our decisions.
That's cool. If somebody wants to get started in day trading, what amount of money would they have to bring, and what kind of like learning should they do before they get started?
Yeah, I think if they're starting out, money is not something they should be thinking about right now, because the first thing you should be doing is you should be on a simulator account. You should be on a demo account, right? The demo account is where everything is real, the price movements are real, everything's real, just the money is not real. So first you want to trade on that and get really, really good at it. Learn the platform, learn how to press the buy and sell button, learn how to get out, learn how to place a stop loss, learn how to place targets, learn the platform first. Once you've done that, then your goal is to get consistently profitable on the demo account first. Because if you can't make money on a fake account, you're not going to make money on a real account. It's hard to break it to you. So first you get money successful there. Once you do that, then you start really small. Something small like $10 per trade as a risk, right? And again, we can use the same exact math. If we buy a stock at $100, right? If it goes down to 99, we're going to get out. We only want to lose $10. How much do we buy? We buy 10 shares, right? So then that's how we used to calculate. And so money is, I think the last thing people should be thinking about right now is they should just be focusing on, can I execute? Can I actually make money? Can I actually be profitable? And I think a lot of people make that mistake is they go too quickly into trading real capital, real money, and they're not trained for that yet.
How long would you recommend working on a simulator account before you started actually
I
getting
would
into real money?
at least 3 months of profitability, right? Not 3 months of being on a simulator, but 3 months of being profitable on that simulator consistently. Because anybody can make money 1 month, right? But what if it was a fluke? What if you got lucky? And what if you made a mistake and went in your favor? So I think we need 3 months to show, okay, you're consistently making money. You're profitable. You got a system down. Once you feel that you've got it down, then you go to real money.
So after 3 months, if someone becomes profitable on a demo account, what platforms do you like to use? What's everything you need as a day trader, the essentials to get started doing that?
So essentials, obviously, when you go live, you need real money, right? You need to have a brokerage account. That could be any of there's so many out there now. Thinkorswim, Interactive Brokers, Charles Schwab. I use Interactive Brokers. That's the most popular one for day traders. So you need a trading platform. You need money in your trading account, right? Once you got that, and obviously a computer, laptop, internet, all the basic stuff. Once you got that, that's basically it. That's literally all you need, right? Now, some people might make it more fancier with having a charting software, which is separate to their main platform. They might use a scanning software. There's so many different tools you can get into, but the fundamentals are you need an internet, you need a laptop or a computer, right? You need a trading platform and a broker. That's it.
That's awesome. Super simple, super easy. And of course, you need the knowledge.
Absolutely, yeah.
Yeah, it's literally a way that anybody anywhere in the world that has an internet connection can go and make money, as opposed to, I grew up in the no tech era where our computers had cassettes that you'd carry around instead of flash drives or internet or whatever. And nowadays it's like you can be anywhere in the world and be able to do that kind of thing. It's pretty impressive.
Absolutely. I mean, I'm half the time I'm outside traveling or doing something. As long as I have my internet, I'm good. So anytime, like I travel 6 months out of the year, Airbnbs or hotels, and the first thing I do is I make sure they got good internet. They got that. I got my little goodie bag. It's got a external USB monitor. It's got a laptop. It's got like all the stuff that I need, and I just travel with it. And wherever I'm at in the world, that's the office for the day. I think that's one of the benefits of this business.
Yeah, that's
Oh, it
awesome.
definitely is.
How many hours a day do you spend working on trades and studying and executing trades and stuff?
9 to 12. So 9 a.m. to 12 p.m. Noon, I'm pretty much done trading. Might look at the charts here and there in the evening just to see what my positions are doing, but the trading is done like 9 to 12 is what I do. So 9 to 9:30 before the market opens, 30 minutes, I'll build a watch list of stocks that I actually want to look at that day, right? Try to go with 10 stocks because otherwise there's 5,000 stocks, you're going to get confused. So I go to battle, as I say, with 10 or 20 stocks max, which I look scan for from 9 o'clock to 9:30. And then 9:30 to 11-ish is when I do most of my trading. And then I do a live stream where I talk about what I actually traded that day and kind of review my trades with my students. And then I'm done at 12. That's kind of the work day.
So, oh, sorry, Roger.
I was just going to say that's great. It's a nice short schedule where you can be done with your day and have a whole bunch of time left to do whatever you want.
Yeah, like podcasts like these right after I finish trading. So it's perfect.
So, Anmol, you're in the trading space. What's your thoughts and opinions on cryptocurrency? Do you do any crypto trading? What's kind of your vision on that?
Yeah, so I mean, I personally don't trade crypto, but crypto is just like anything else. It's got a chart. So if it's got a chart, you can trade it. So I have no problems with anybody trading crypto. You could absolutely trade it. In fact, there's some great trading opportunities on the charts on there. So I don't trade in it, but I do have an investment in a cryptocurrency. Um, and my thoughts with cryptocurrencies are that it's kind of like the early stages of internet. When internet was new, what happened in the dot-com era? Every company that it was an internet company, the stocks went up, right? Everything that had .com under its name went up. Rock.com, Globe.com, Pet.com, like all these companies were rocket shipping. And then what happened? We got the bust, but then out of the bust, 99% of the companies went bankrupt, but then came a few winners, Microsoft, Google's, and Amazon's and stuff like that. So I think that's kind of where we're at right now with the crypto industry, is that, is early stages of internet. We saw every single coin, Dogecoin, this coin, that coin, everything's moving up. Eventually, they're all going to die down, and then there's going to be a few winners that are going to emerge. And my opinion is it's not going to be Bitcoin. I think Bitcoin is kind of like the AOL of internet, where it was the first one. It's a great idea. It started it all, but now there's better, faster technology. Just like AOL was, trumped by MSN, then Yahoo, and now Google, and then just like MySpace was trumped by Facebook and stuff like that, and now X. So same thing is going to happen with cryptocurrencies, where Bitcoin started it all. It created the idea, right? That was the first one, but it's too slow to be able to be used in real life. So it's going to be replaced with faster, better technology, something like an Algorand, and that's another cryptocurrency, much smaller scale. But that's the one that I am looking at as an investment. But again, I'm not trading it. It's just something that I put some money in, see what happens.
Mm-hmm. And we talked before the recording about Tesla and Elon Musk. Do you have any Dogecoin?
I don't know. I would never touch that.
Yeah, Dogecoin is
I
kind
care
of
too much about my money.
yeah. It seems a funny token. There's been a few runs all powered by Elon Musk. It's kind of crazy.
Yeah. I mean, I'd rather buy Tesla stock and forget about it and not have to look at it, right? Because Dogecoin, those are trading things. Like you have to be in and out. Otherwise,
Yeah.
at some point, the music's going to stop. And it's kind of like musical chairs. We'll see what happens then. So,
Right.
Yeah,
Awesome.
the way it was explained to me is I have a friend that's a syndication attorney in the crypto space. And he's like, whatever you look at, it could go up or down, but the way that you would win is if you could predict the one that's going to be the Google version. If you could pick the one that's going to go all the way and become the new norm, that's the one that you want to get behind. Like theoretically, if you could pick that and hold on to it into the future, that would be the winning one.
absolutely. And it's going to happen. And I think I picked the right one. But again, time will tell because it's still too early, still very, very early. But I think the one I pick Algorand, I think that's going to be the one if you look at what's going on. It's kind of under the radar. It doesn't move much like other currencies. So it doesn't get a lot of that hype or the social media attention. But there's been tons of patents, Microsoft, Visa, all these companies are filing that quote that cryptocurrency. So I'm looking at stuff like under the radar stuff that people might not necessarily be in the news because usually, the ones that are in the news are never going to be the ones that end up making it. They're the hypey ones. And then suddenly the government announces something and then we're like, oh, we didn't even hear about this. So that's kind of where I'm at. But again, with cryptos, it's almost like buying a penny stock. It's very risky, and 90% of them are going to be worth nothing in a few years, right? So there's going to be a few winners, but 90% are going to be worth nothing. So there is a lot of risk in the cryptocurrency, and I only suggest, people who have disposable capital to even be looking at cryptos as an investment. It's not something you're going to retire on, because you might have nothing to retire on if you put your money in cryptos.
Interesting.
Yeah, that's one
What
of the
kind
harder
of
things for me to get through is because I like to invest in real estate, and there are going to be some ups and downs. Right now, we're going through a big change in the real estate industry where the National Association of Realtors is going through a giant class action lawsuit. And at this point, they're about to settle for $418 million. But at the same time, real estate always has that intrinsic value where tomorrow there's going to be somebody living in that building,
Hmm.
regardless if interest rates are up and, the price of rent is down and landlord laws get a little bit stiffer and people get a little bit more scared because of, things that are going on. There's always going to be a value that they have. Whereas in crypto, the question is it going up or down? And
Hmm.
it could go down to nothing.
Yeah, absolutely. And I think, that you're absolutely spot on. Any company you buy, any real estate you buy, there's an inherent value that's going to be left, even if everything goes wrong. But with crypto, it's purely belief at this point, and humans' beliefs are not to be trusted. So that is not something you want to really retire in on. But even talking about real estate, there's websites now. One of them is called Lofty.ai. So they have tokenized real estate now on blockchain. So on this cryptocurrency that I'm talking about, Algorand. So you can actually now invest in real estate, tokenized version. So you might have a property, let's say it's worth $1 million. You broke it up, right, into like 100,000 units, right? $50 each, $100 each, whatever you want to put in. And people can just buy slices or tokens of those properties, right? And you still technically own it, because at any time there's a vote, you can vote on the changes on the protocol. So, the tenant's not paying us rent, and everybody who's a token owner can vote on what the next step should be from there on, and you get paid rent daily. It's broken down into daily, and it's paid right into your blockchain. So that innovation is happening a lot in real estate too, that I would certainly recommend real estate investors to look into, because you can get similar returns without a lot of the risk that you might take, or you can have diversification potential with multiple slices or tokens of each properties.
Yeah,
That's
it's
actually really interesting.
going to be the wave of the future for sure. And when you can get in and limit your risks, if we have a bad apartment building, we've got one apartment building, and although it might have 40 individual clients in there that we can make money off of, it's
Mm.
still limited to that area and those problems. And if one bad tenant goes and freaks out all the other tenants, it's still in the same building, and you still
Yeah.
have all the problems in that same thing. Whereas with a cryptocurrency tokenized like that, you can go through and have stuff all over in multiple states, or I'm sure countries will be next. Here in Utah, we're going through a lot of higher costs where the interest rates are higher, the house prices are higher, the median income doesn't support the median house. And so you kind of see like we're going to have a little bit of a back step here in real estate. So a little bit harder to invest with that knowledge here, but you can go other places easily and be able to invest in, Texas real estate, or, commercial. You can get into other asset classes like storage, RV parks, whatever. And really gives you a lot of ability to diversify.
Mm.
Yeah, absolutely. That kind of tokenization of real estate is definitely key. I mean, when you think about real estate investing, a lot of people think you need a ton of money, go buy a rental property, but maybe owning 1/100th of a share is, a cheaper way to do it. Real estate's proved itself year over year, and
Yeah,
I
and
think that's a good alternative.
yeah, because you get rent, you get paid the rent anyway. So, if a property, let's say, pays $10,000 a month, yeah, you don't own all the property, but whatever fraction you own it in the same fraction, you will still get your rent. So I think that offers the ability for people to have slices of properties and spread out geographically. So overall, your risk is much diversified. Whereas if you had to actually buy the real estate, it's very hard for individual investors to grow from 0 properties to 100 properties. But you can now with tokenization and do all of that. And it's all on the blockchain. So it's not even like, oh, this guy didn't pay rent. I mean, it's all blockchain. You're going to get it instantly, and it's paid out every night. The rent is paid out in the proportion. So I think that is definitely the future of real estate investing. Many different companies started to get into it now. There's one called Slice Spaces, one called Lofty.ai. But I think there are definitely the future of properties, because even Airbnbs, I think they have a new listing, which was an Airbnb property that's on tokenized. You can own a piece of that Airbnb using tokenization. So a lot of cool stuff happening in this space for sure.
Yeah. The digital era.
Mhm.
Did you ever get into GameStop back when it was going up and everybody was like predicting it to go down?
Yeah, I actually shorted it. Not. I didn't sleep well one night. I remember that. I shorted that. I think it was, I forgot what price it was, some 300 or something like that. And the next morning I woke up and I think it was like 400 or 500. So I was like, oh crap, yeah, not good. But luckily that was kind of the day where it just came all the way back down. I didn't make much money on it, but I was able to get out unscathed compared to what I was down in the morning. So that's the thing. We all knew it was going to come back to zero, which it's almost there now. But markets can stay irrational longer than you can stay solvent. So I think betting against things is usually not a great idea. Like I saw some people talking about betting against Tesla recently, and it doesn't end well usually, because shorting, there's losses are unlimited, right? Stock could double, triple, and you could be out of the money. So I think I now tend to just stay away from anything that's in the news that much, like a GameStop or AMC. Like anytime where if my Uber driver is talking about a stock, I'm not going to trade it. So that's one of the new things is I try to stay away from that and just focus on the predictable, easy money that exists, rather than trying to be that hero who picked the top or the bottom on something.
That's great
Yeah.
advice.
You tend to see a lot of stocks with like media hype, like you said, AMC, GameStop. A lot of hedge fund managers lost their jobs that day.
Rightly
That was,
so. Rightly
yeah.
so.
And that's crazy. I mean, that it goes to show, like, a group of users on Reddit got together and like, hey, we're gonna pump this up, and blew it through the freaking roof. Like it's kind of crazy how trading can just be that way. I had an
Yeah, but I
experience
don't
with that.
fully believe that it was the Reddit people who caused it. I think they kind of started the idea of it, but then it was other smaller funds that just kind of piggybacked. They're like, okay, there's money to be made here. And then they piggybacked to try to take that, because hedge funds also a very competitive world where each of them try to take each other out. So when they saw that these hedge funds are vulnerable, then other smaller funds teamed up and they started buying it just to take this guy out. Because Reddit people, they don't have enough money to move the stock, right? I mean, the way the stock moved shows some big money coming in. And no matter how many investors get together, I don't think they will cause even a blip of that, because we can see that now, right? Stock's not even moving anywhere despite them holding and buying, which goes to show the funds always do this. And the same thing is happening right now with Bitcoin. You see all the banks launching Bitcoin ETFs. Hey, buying Bitcoin. There's advertising coming in, because they don't care about Bitcoin. they care about making their money and getting their fees. So when Wall Street sees an opportunity to make money off something where they're not going to be given the credit, like, hey, it's the Reddit people who caused all of this, but it's those hedge funds making money.
It's the big money. So is it true that like the big money, the big corporations, I see a lot of things on TikTok or on YouTube, and I hear a lot about, the day traders are trading against the corporations, or they almost have their algorithms, right? Like they know how the stock's going to move, and they can pull back so people get out of the stock. And then is that true? Is it really, as a day trader, are you trading against the bigger money, and do they kind of push and pull the stock how they want to?
No, I think nobody knows what the stock is going to do. Nobody knows where it's going. It's all, fooled by randomness. People always want to find a reason of why something happened, but stuff happens. And yes, we're all competing against each other, right? Because if I buy a stock, it's not a magical pool that I'm buying the stock from. If I'm buying the stock, somebody out there is selling it to me. So either he's right or I'm right. right? Now, we could also both be right. Maybe he bought it earlier, he made money on it, and then he sold it to me, and I sold it to somebody else higher. So it's possible we all made money. So it's not like I think a lot of the thing with Reddit and stuff like that is before 2000, before GME and AMC, there was no like these massive day traders. Now everybody calls themselves a day trader, right? But the problem is they don't understand how the markets work. It's impossible for anybody to cause, sure, are there like, gray areas that get exploited by big hedge funds? Yeah, but nobody knows what the stock's. Nobody's causing it to do that because it also takes money for it to do that, right? If they're making the stock go down, that means they're selling it. They're putting their money behind it. So I don't believe. I think that's a victim mentality. Oh, hedge funds are controlling my money, or they know what it's going to do. I think it's all victim mentality. As a professional trader, you know your odds, you know your numbers, and you really don't care who or what does that. It's happening. So, right, why it happened doesn't matter. It's happening. So how are you going to deal with that?
Really good insight. I've always heard that. That's funny.
I think that's true. And I think that's true in 90% of the applications, except for when our senators and our congressmen know what they're going to do as far as laws, and they bet against the stock or with the stock based on the way that they're going to vote and put in laws.
No, Nancy Pelosi is the best investor of
She
all
is the
time.
best trader.
She's the best investor. Ray Dalio left behind. Everybody left behind. She is. She actually took one of our courses at one time.
Really?
No,
That's awesome. No, I know. I've seen those websites where it's like, here's what the politicians are buying, just do what they're doing and follow Nancy Pelosi, you'll probably do pretty good.
yeah,
Yeah, that's funny.
yeah. Her salary is $200,000, but she made $8 million on Nvidia just recently.
Right.
Yeah, I shared a meme with one of my friends that we're both Warren Buffett followers. We both read a few of his books and stuff. And Warren Buffett's in the top part of the meme, and he's like, nobody knows which way stocks are going to go. And Nancy Pelosi's picture's down below it and says, oh, that's cute.
Hold my beer.
Hold my beer. It's a little weird. Politicians kind of, they know something we don't. I mean, is that corrupt? There's got to be
Well, if a citizen
something
does
off
it,
about
it's
it.
as corrupt as can be, and you'll go to prison. If a politician does it, they've been, allowed to break
Right.
the rules, and it's okay because nobody's saying anything or coming after them. And we just kind of go, oh, that's interesting how their $200,000 salary has somehow pumped them up to be worth, 30, $50 million. And it's like, wow,
Right.
how do I
Yeah.
do that?
My granddad used to say, if you're poor as a politician, you're a poor politician.
Right. If you
Yeah.
can't make your own rules to make your own money, it'd be an interesting way to run real estate, is if you could just say, okay, from here on out, we're going to make a rule that self-storage is better than multifamily. And then all of a sudden you made money because you betted on it and
Right.
bet against multifamily. It's, an interesting concept that you could control the way that votes and rules would go. Here in Utah, we have really great landlord laws. And in other states, like a lot of us Utahns won't even touch multifamily in California because the laws are just so pro tenant.
Mm.
If you could say, well, tomorrow California is going to be pro landlord and buy a bunch of stuff or put in a bunch of call options or however you do it, it would just be fantastically huge. How do you go from being not a good landlord state to being a great landlord state?
Right.
And if you can make the rules, you just do it.
Yeah.
So back to looking at charts, when you find a stock you want to trade and you're looking for patterns, are you just looking for some sort of consistency? Do you have a set of patterns you like to see show up? Say there's a V in the stock line, buy here, sell there. Or is it the consistency in patterns, whether it's over a week or over a month or over 5 years? How do you dive deep into that analysis and decide when it's go time?
Yeah, we have certain patterns that we will look for, but then as you said, like it's kind of like a puzzle. You have to put everything together. I think the mistake why most traders lose is because they learn a pattern somewhere by watching a course or something, and then just look at that pattern and they ignore everything else, right? So
Mhm.
trading is like a puzzle. The more pieces you have together, the better it is. So one piece would be what's the pattern we're looking at. The other could be, okay, is the market in alignment? Because if you're buying a stock but the market's going down, well, it doesn't matter how good your pattern is, right? The market's going down. So your likelihood the stock is going to go down is also pretty high. So then we look at the stock, we look at the pattern, and we look at the market, right? We also might look at the sector because you might buy, let's say, I don't know, Tesla, right? And you're like, wow, the market's going higher, but why is my Tesla going down? Well, that's because the whole EV, electronic vehicle sector was going down, right? But let's say technology stocks, Microsoft, Apple were going up that day. So we look at the sector, we look at the market, we look at the pattern, and then we also look at the higher time frames. Where's the stock coming from? What's the pattern like? The higher time frames like the monthly chart, the weekly chart. So there's a lot that goes on to pick the right trade, but it starts with finding a pattern.
Nice. And when you wake up, like you said, you do a watch list from 9 to 9:30. How long does it take you to, you know, pick a stock and say, "Hey, this is what I'm day trading today." And I know you have many years of experience, but how fast can you narrow it down and see something or find a pattern and then decide to make a move?
Honestly, nowadays it takes me 5 minutes or less, right? But when I
Wow.
started, it probably took me an hour. Then it started taking me 30 minutes. Then it started making 20. Nowadays, like 5 minutes, even if I get out of my desk at like 9:20, 9:25, like I could still be ready to go for 9:30. But that's also because my eyes are now trained for that pattern that I could be like going so fast through these like hundreds of charts. As soon as I see a pattern, I'm able to just stop. But pattern recognition is almost like it's almost like when you meet people. So if you meet somebody at a networking event, let's say for the first time ever, and,
Mhm.
and then let's say you don't see them for 5 weeks, you probably forget what they look like, right? You wouldn't even remember their name. But now, if I say, "Hey, Angelina Jolie," right? Now you haven't met her, but you can put up a picture in front of your face, and you can imagine what she looks like. And no matter, even though you haven't met her, no matter how many times you see her somewhere, you'll know that it's her, right? Or whatever famous person you're looking at. So when you get good at pattern recognition, it's almost like watching pictures. Like you remember that picture. It's almost like you've seen it before. So you're able to stop pretty quickly. So that's why now it takes me 5 minutes, whereas for a newcomer, it probably take him at least half hour.
Oh, that's really cool. I look at stock charts and I'm like, "Whoa, what's going on here? Is it going up? Is it going down? Should I buy it?
Yeah, I mean, I
Maybe I
still
won't
ask
buy
myself
it."
those questions, just the answer is quicker these days, but I still ask myself, is it the right idea? Should I do it? Should I not? I mean, those things will never go away.
Right.
Uh, we're human, but it's just your ability to say, okay, yes, it's a good one. Like to be decisive, I think that's the difference maker between when you're starting out versus 10, 14, 15 years in. It's just that you're more decisive now. You can easily say, no, I don't want to take that because of this, or I want to take this because of this, rather than dwelling on it, or what we call paralysis by analysis, where you just keep analyzing the stock and then you miss it and you're like, I knew I should have bought it. I think
Right.
that's the mistakes you want to avoid in trading is emotions.
Absolutely. I feel like you're big on Tesla, long term as well as day trading. And to go a little bit sideways, really far away from the podcast, do you have a Cybertruck reservation, or are you looking to get one?
I don't have a reservation, but if it was available in the store, I'd buy. I never like reserving stuff. Like I'm never one of those pre-order reserving guy. I'm like, if it's available in the store, or I can just go pick it up, I probably would buy it because it's really cool. Like I
Yeah.
saw it in the store the other day, and they had the matte white version. I was like, that is cool. Like so, yeah. Even though in New York City, like we end up
Right.
Ubering anyway because you don't get to drive here a lot. Where you're gonna park, you know?
Right. Yeah, I saw one in Vegas. They're pretty sleek. It was all wrapped with somebody's business on it. It was cool.
We've got a
Yeah.
local here that's the Diesel Brothers,
Mm.
and they typically do all sorts of like diesel modifications to trucks. But they've got one guy that I just kind of watch him, so I don't know him that well. But the guy's name is like Supercar Ron, and so he pays the Diesel Brothers to modify a Cybertruck and put big snow tracks on it and light kits, and it looks like a tank and goes around like crazy, and it's fun to watch, and it's a really cool truck. They've done lots of different modifications to it, and to see that thing turn into a tank and rally around in, whatever it is, 10 feet of snow, it's pretty impressive. It's fun to watch.
Absolutely.
Yeah.
Imagine if you guys had a
Anmol, is there?
up with the podcast logo and it's going by, the amount of views it would get on YouTube and Twitter.
Right. I know. Totally. I should just hit up Elon Musk on Twitter or X and be like, hey, I mean, you've seen like people will send him a message and he's like, yeah, I'll send you one right now.
Yeah, he hasn't sent me one
Crazy.
till date.
I know. Elon, he's a crazy guy, but like you said earlier, it takes a little bit of crazy to push things and move things. Anmol, is there anything specifically you wanted to jump into or talk about on this podcast that we haven't covered?
No, whatever is going to be beneficial to your listeners, by the gathering of it, people are closer to retirement or something like that. But my only advice is if you're somebody involved in the stock market, definitely consider at this point having some money set aside that is not in the markets. Because for the longest time, being invested in the stock market was a great thing. And it still will be a great thing for the next 20, 30, 40 years. But if you're somebody who might need money in the next 3 years, let's say, you're close
Mhm.
to retirement or whatever, I would just say, have some cash. Like, don't have it all in the stock market because we are in an election year. Things could get crazy, typically in the September, October timeframe. So, you would want to have at least some cash set aside. So at least you're good for the retirement and you don't have to worry about that because nothing worse than, having a market crash like we did in 2000 and 2008. And sure, it came back up, but it took a bunch of years for it to come back up, right? And
Yeah.
if you're in retirement, you don't have that luxury. So I think that's just something I would ask people to, I guess, consider.
And what is your outlook on the market? I mean, are we overdue? Do you think we might see one of those in the next couple of years? What's your outlook on that?
I think that this year, August to October is going to be time to watch. Just because typically, we get a recession market downturn 11 months after we first raised interest rates, which would mean August of this year. So August to October is typically the time where markets could have a pullback or get a little tricky. And also we're in election year. So I think that would be the time where I personally expect a pullback. But that might not be a crazy big pullback, but it might just be a small pullback. And then it really comes down to the election results, right? I feel like if it's independent or Republican, stock markets typically outperform, and they're going to
Mm.
continue to go up for the next 5, 10 years. But let's say in a case of the current administration coming right back again, then absolutely, I think that we're going to get probably the biggest crash we've got in a long time.
Interesting. Haven't
Which is
thought about it.
exactly how I feel about real estate. We're definitely going to have a whole
Yeah.
bunch of propping up and, whatever they can do to make it look good now. If the powers that be have the power to get reelected, they're going to do it by saying, "Oh, look at us. We created jobs and we have a great real estate market, a great economy. We've squashed inflation." Or it's going to be time for a change. And, somebody's going to say, well, this is, not working. What can we do to fix it? Without getting too political, we definitely have some general rules that apply in real estate, whether it's Republican or Democrat, and we'll see. We'll
Yeah.
see how it goes. And all bets are off right now for next year. I wouldn't, bet anything other than what's going to happen this year.
Yeah, I think real estate is going to be fine because like there's still a lot of cash, there's still a lot of money, and there's still a lot of people waiting on the sidelines to buy. So anytime you get a few points correction in real estate, there's people just who've been waiting to they
Yeah.
come buy it up and the price stabilizes, and they're talking about lowering interest rates. So if that happens, then I think we're going to see a pretty big boom in real estate because we've seen a little decline recently in the high interest rate environment, but it's still not that much of a decline. So when interest rates get lowered again, all those sideline people are going to come back in. So I think real estate looks to me that it's going to be okay, at least for now. Unless you're in places like New York or California, then things could obviously be a little tricky. But I think the rest of the country is totally fine.
Right. Yeah, in Utah, we're making our way up on that list too. I mean, prices here. Have you seen that, Roger? We're like third most unaffordable housing in the country,
Oh
Oh
yeah.
wow, I
behind
didn't know that.
California and New York.
The problem is
Wow.
our medium wages are so low and house prices are so high. We've had a huge
Yeah.
amount of influx and we're still really underbuilt. We have something to the effect of 30 to 50,000 people that are wanting a house and need to get into a house but can't afford it.
Yeah.
Mm,
And where the median house, you know, costs about 130,000 a year in your salary, that's for, a smaller house in some of these areas. I flipped a house that
Yeah.
was $570,000 and it was 3 bedroom, 1 bath. So it doesn't make a lot of sense to share it with roommates or family members and stuff. So you got to bring a substantial amount of income and credit to get what's basically a smaller house. And it's tough. We'll see how it pans out, but we're definitely looking at what could be a pretty big correction in the valley, and
Mm.
wages need to catch up, and we'll see how that goes over the next few years. Because people
yeah,
definitely want houses, but it's just hard to get somebody to go from living in their mom's basement to go on and affording a new house and all that stuff. So we'll see how that one goes.
yeah. I think people
Something
moving
needs to
out of
happen.
California and moving out of New York is causing influx in a lot of these areas, like Austin, Texas, and there's all people moving from California. You go to Scottsdale, Phoenix, Arizona, people moving from California, bringing that California money, propping up Arizona, propping up Texas, and I think
Hmm.
same thing is happening for Utah because I mean, some parts of Utah are beautiful, and outside of California, that's what they're looking for, right? Arizona, a little beautiful, Austin, a little greenery. Then they go to Utah, and the prices keep getting propped up because they sell their properties in California for much higher. They bring all that money in Utah, and now they have all this money to buy things with. I think that's kind of the what we're seeing right now.
Yeah. Especially back in 2021, you saw it a lot. They come with straight
Mm,
cash offers, and it was
Yeah,
a tricky situation for sure.
yeah. The cliche
mm,
is definitely Californians selling their house and taking their equity
Yeah.
and just coming to Utah and Idaho, and they drop down their equity on a purchase and they can buy all cash and they don't care if it's $50,000 more than the next guy because it's $1 million
Exactly.
less than their house that was in California, and
mm.
Yeah.
Yeah.
everything else.
It's a tricky market. Should we hop into the final four or?
Yeah, let's do it.
All right. So, question number one, Anmol, what is your favorite book? Business
Favorite
book.
book is Mindset by Carol Dweck.
Okay. I haven't heard that one, but I think I'll have to add it to my
Not
list.
you gotta read it. I mean, you've heard of the concept somehow, but it's definitely a great book to read. Yeah.
Okay. Awesome. Second question, what brings you happiness?
What brings me happiness is showing other people how to be the best version of them for themselves.
Awesome. Next question, what's your favorite way to give back?
My favorite way to give back is by teaching other people everything I know. So if I go out and spend hundreds of thousands of dollars on coaches, workshop mentors, but then I just share it freely on social media or other methods, I think that's the value that I would bring back is sharing what I know and what I've learned and then sharing it to others.
Awesome. And final question, what does your future retirement look like, and or do you have a future retirement?
I don't know if I'm ever going to fully retire unless life forces me to. I don't see myself retiring because I love what I do. I don't do this just for the money, and it brings me a lot of happiness to be productive and go to the next level. So that's not something I've thought about yet. But again, those things can change 20 years from now. But for now, I can't even think about it.
Awesome. Anmol, it's been great to have you on today. Definitely learned a lot from you. You might just, try to get started in day trading a little bit.
Sure, happy to help anytime.
Where's the best place for our listeners to find you on social and the internet?
Yeah, I think the best place if you're interested in trading would be to go to livetraders.com. That's where you can learn a bit more about trading, get some free introductory resources to get started with. And then if you're interested in my book, it's called Prepping for Success 10 Keys for Making It in Life. You can get it on Amazon, Barnes and Nobles, Walmart, wherever you buy your books. It's called Prepping for Success. Book has nothing to do with trading. It's all about personal development, things that I've learned along my success journey. And then social media, Instagram and Twitter is kind of where I'm the most active. My username on both of them is the same. It's Delta90, DELTANINETY. Don't ask me why. I had it a long time ago. Didn't change. So we're just gonna roll with that.
And before we go, tell us about your necklace. Pretty interesting.
These are this crystals. One of them is aquamarine. The other one is quartz. I got it in Sedona. I was doing an ATV bike ride in Sedona. Beautiful. Just felt the great energy there, the vortex. And it's a pretty big place for crystals. So I stopped by a store there and then was just chatting with the lady who was running the store. And she was showing me these crystals. And I just, just felt some energy in it. So I was like, and they look cool. So I thought, okay,
Yeah,
I'm going to take them.
I like it. I have a crystal. Man, I lost it, but it was a good one. I think it was moldavite. Have you heard of moldavite?
I have not, but I'm very curious about crystals. I'm wearing one on my ring as well.
Yeah, if you get the moment or a chance, look into moldavite. It's a very, very strong. Feels like it has some energy in it. I used to like hold it and almost felt like it was vibrating. Super cool, interesting, but
Nice.
I had to ask. Crystals
That's
are
what
pretty
my
cool.
trading desk is like. In front of my trading computer is like a bunch of crystals.
Yeah,
I will take any edge I can get.
you're right.
If it works, if it doesn't work, I don't care. The fact that I think it works is enough.
I know. I'm the same way.
Yeah.
That's awesome. Well, cool. Thanks for being on today. And Roger, I'll let you kind of close it out for us.
Thanks for joining us today on the Retire Wealthy and Happy podcast. We really appreciated Anmol Singh for coming on here and sharing his knowledge about day trading. We'll see you on the next podcast. Thanks, guys.
Hope you got value from this episode. And if you have a minute, then take the time to leave an honest written review for the podcast, because we take those reviews seriously and it'll help us serve you better on the next episodes. And most importantly, be sure to start taking action so you can control your financial future today.